Which is the better Coinbase ETF? CONY or CONY by YieldMax, or COIW, which is a weekly paying leveraged ETF by RoundHill. Today, we're going to put both of these to the test. We're seeing coin hit some new all-time highs, and we're watching some massive returns in the stock market. So let's put these two ETFs head to head and see which one comes out on top. We're going to look at things like NAV erosion, total dividends paid out, and total return when we factor in to see which one meets the criteria for our investment strategies. Of course, this is not financial advice, but I do hope you guys do enjoy. Let me know in the comments what you think, and if you are interested in these style videos, if you want to know what the best weekly dividend ETFs are, what the best monthly dividend ETFs are, don't forget to like and subscribe so you never miss future free updates, and you're joining a community of over 21,000 active ETF investors. Let's roll that intro. CONY is the YieldMax Coin Option Income Strategy ETF. It has a distribution rate of 67.5%, and personally, I have a love-hate relationship with this ETF. Now, if you have been with me for a long time, and I'm talking years on the channel, I first started talking about CONY and Tesla when they put YieldMax on the ETF income investing map. No one had really known about the company, and boom, these things showed up and they boasted 50, 60, 100% distribution rates and drove a lot of people insane. And this is where the love-hate relationship comes in. I purchased these and I tracked their progress for years at a time. And one thing you'll know now, I think you'll know by tracking me with the channel, is I don't hold these ETFs indefinitely. But that's how I was doing it back then because I was a buy and hold investor. Now I like to swing with these high income ETFs when the underlying is going ballistic. And so that's something that I learned. CONY did lose me money. Tesla did lose me money. But I really want to see how CONY does compare to COIW in the same time of trading. They both are writing calls on or swaps on COIN. We've seen Coinbase go absolutely nuts with this Bitcoin run that really fuels Coinbase because it's the only publicly traded crypto-based brokerage. Now you have other brokerages you can trade crypto on, but Coinbase is solely a crypto brokerage. So it's very interesting. But again, you do not own coin directly when you invest in this fund. Some YieldMax ETFs do hold the underlying like ULTY, but most of them do not. So these are synthetic long calls, and we're going to kind of compare them to the other options with our leveraged ETF that does pay weekly. CONY is a monthly payer, COIW is a weekly payer. But I really want to see how these two are stacking up, and I know you guys are really interested because I've been getting a crazy number of comments on CONY, on COIW, on COII, on Coinbase stock itself. So this Bitcoin run is definitely fueling a lot of intrigue with these ETFs and Coinbase stock. Now let's check out COIW. I will say nobody was really pumped about the leveraged ETFs like I thought we would be, and COIW has been rocking it. We're seeing a distribution rate of 78.42%, bit higher than CONY, but not by much. And I will also say it is a weekly payer, which is why a lot of people are loving this one compared to CONY that pays monthly. So we are going to factor all of that in when we look at our distributions and, of course, our total return, because I feel like weekly payers do have an upper hand just because it's fun to get paid more often. Is there any major benefit to that? I don't know. You let me know in the comments what you guys think, whether it be with compounding or just getting paid more often. Now, I will also say this is a 1.2x leveraged ETF, and they use swaps, which is different than what CONY does. And that 1.2x, I love it. It's right in the sweet spot. I could probably even go to like a 1.5x personally, but I do think they range based off of what the market is doing, so it does fluctuate. But a 1.2x is nice. You're getting a little bit more kind of exposure, a little bit more risk, but not a whole lot to where I can't sleep at night. We can also see it wants to amplify the returns. Like we said, 120% of Coinbase's weekly performance, and you get a combination of single stock leverage and weekly income, which is what I think the market is really interested in. Expense ratio of 0.99, pretty consistent with what we've seen across the income investing space. Unfortunately, it just gets higher and higher and higher. And we can go through and see all of this stuff. I do recommend, if you want to check out their distribution histories, if you want to check out their websites, a lot of good information on here, and you really should. If you're going to be buying any of these ETFs, these are higher risk ETFs. They're not necessarily long-term plays, in my opinion. So I recommend checking out their websites, find this data for yourself, and let me know what you think. If you guys are buying these, let me know in the comments, because I always love finding out what our retail investors are doing. It's really interesting what we're seeing so far. So I have all three plugged into Google Finance, and we have Coin or COIN, which is the underlying. We have CONY, and we have COIW. Now, we have seen Coinbase, the actual stock, has gone up 171 $1,048 or 69.06%. CONY is down $2.72 during that same time frame, down 20.86%. COIW is up $15.67 for a 32.08% return. Now, not even return, growth, because that's not including distributions. And that's one thing. I don't think CONY is negative overall, but we're not factoring in distributions. This is just basically the NAV. And it's going to be interesting to compare the two. We're going to use a drip calculator to showcase these other two. But I do want to say COIW started trading mid-February, which is interesting. So it had less time than CONY. And even though it is in fact newer, it was able to outperform even with less dividends paid. So I don't know. We'll see when we plug them both into the drip calculator, but I am really impressed by how they've been doing. Now, if you're not familiar with income investing or dividend investing, distribution investing, whatever you want to call it, these income funds are not designed to outperform their underlyings. In some specific markets, they can, depending on implied volatility and overall return of the underlying, but it's not the goal. The goal is income. We want to get paid right away. So that's one big difference. And so this chart isn't really showcasing the total return for all of them, just showcasing how the NAV or net asset value, aka the money invested, how it's actually paying out. Because people will look at just this chart and go, wow, CONY is a terrible option. It is down $2 when Coinbase stock is up $171. Why would anyone buy this? Well, for the current income, which we're going to get to in just a moment. But I do want to say, like I said, I like to have both the underlying and some of these ETFs involved for income and overall growth. Let me know what your strategy is in the comments. I'm really curious. Do you guys do that as well? Are you all income based? Are you all growth based? Because I want everyone to get along. I'm tired of the back and forth fighting between income and growth investing. I think there's a space for everybody. And I think a portfolio that combines both can do really, really well. Of course, not financial advice, but again, let me know in the comments. Are you all growth? Are you all dividends? And if so, what stocks are you buying? I'm using dividendchannel.com for their drip calculator. I have CONY plugged in and I have our other category as COIW. We're going to compare both of them. And what's cool about this calculator is it's going to pull all the data, including all the distributions, and showcase what's paying as much and what the actual price return is with drip on and drip off. So here we go. What we're going to see now, it's really, really interesting. CONY is underperforming COIW and it's not very close. And what's wild to me is what it did was it took the actual date range for the inception of COIW. And what that means is CONY has a longer history of trading. It's been trading for quite a long time now, actually. But COIW being new, it wants to compare them for the exact same number of days. Now, CONY, we can see, is still a phenomenal return. Your total return is 25.27%, which, I mean, it's been 6 months. So that's pretty phenomenal. We can't really complain that much. That is an annualized gain of 62.75%. Your $10,000 invested would get you $12,527, which is amazing. And then we look at COIW. And what really blows me away, this thing has already paid so much more. So with CONY, we've seen dividends per share of $2.96. With COIW, $8.93. So it's paying out significantly more. Our total return is 62.59%. And the reason I wanted to talk about this topic for this video is I track all the weekly pairs. And COIW has absolutely launched to first place. First, it was PLTW, and then we had NVDW for a while. But COIW is up like 70% in that account, which is absolutely amazing. And look at this, an annualized gain of 155.41%. Now, again, I've already said these are high-risk funds, and they only perform like this in specific markets, right? When we see things going ballistic, when you see high implied volatility, and you see the underlying doing really, really well. But I do like comparing them because I don't see the argument for CONY as much as I used to. And the reasoning behind that is I've watched the RoundHill leverage funds do absolutely phenomenal. Now, they're not all in the green. There's one that's in the red, but they are really, and I'm biased. I'm going to say it right now. I'm biased, guys. I love them. I love them because I like the little bit of leverage. I like that you still have the options. You still have the income coming in, but you're also getting that weekly tied on top of it, but they're also seeing some crazy price appreciation. So again, it was up 32% without dividends, without including the dividends. So you're able to capture more upside potential with COIW than you are with CONY. And what that means is in this market, when we're seeing coin go absolutely nuts, you can still make a decent return on it just by holding these and still getting paid out some big dividends. Again, I am not bashing CONY. I think if you can time it well, a lot of the YieldMax ETFs do really, really well. But COIW and the leveraged RoundHill funds are kind of blowing me away. And again, they're leveraged to an extent where it's still relatively minimal risk. It's not as high risk as like a 2x or a 3x fund, 1.2x. And if you really think that Coinbase stock is going to drop by, I think it has to go down by 83.333% in order for you to lose all of your money, because that's the way the leverage is impacting it, right? So if you really think Coinbase stock is going to drop that significantly, or any of the underlyings, right? Netflix, Meta, Nvidia, Tesla, all of these, if you think any of those stocks are going to go down by 84%, I wouldn't be investing in the market as a whole, honestly, just because if you think these are going to go that poorly, we're due for a crazy correction, and we might be. But COIW, your $10,000 gets you $16,259, which is amazing. With dividends not reinvested, still pretty impressive. We're seeing a 13.7% return from CONY, again, in under 6 months. And for COIW, it's 46.98%, which is wild. And what I don't like, people have been arguing whether or not you're supposed to reinvest your dividends from these. Personally, I don't necessarily reinvest them in the actual ETF I received them from. I'll put it into something else, whether it be growth, like right into coin stock itself, or move it around all over the place. But I'm just very, very impressed with COIW. So let me know what you guys think in the comments, and let me know if you liked this video. There's so much content I can make on these, and it's been really fun trying out some new styles. And so if you guys genuinely do like this and you want me to make more episodes like this, maybe on the NVIDIA ones, maybe on the MSTR funds, let me know, because I think it'd be super cool to showcase more of these. And I want to know when YieldMax comes out on top versus when RoundHill comes out on top, because these companies are vastly different. And last but not least, don't forget, you guys are paying their bills by holding these funds. So make sure it's worth it to you. Make sure it matches your strategy. Make sure you're getting what you want out of the fund before we just go piling into something that all the YouTubers are talking about. So I do hope you guys enjoy. And again, like and subscribe so you don't miss future content. If you like this video, check out these popping up on your screen right now, including all of the YieldMax weekly pairs and what they paid me this week, and all the RoundHill weekly pairs and what they paid me just this week. It's been a crazy week in the market, and I hope you guys have made it into the green just like I have. Again, thank you so much. Like and subscribe, and I hope to see you in the next video.